If I told you that insurance agents in the US make anywhere from $30,000 a year to over $400,000 a year, doing the exact same job, would you believe me? It's true. And the difference isn't luck. It's whether you built a real book of business or you're just renewing a paycheck every 2 weeks. Today I'm breaking down exactly what it costs, what it pays, and whether building an insurance book of business is actually worth your time in 2026. This video is for people who don't mind sales, who can handle rejection without taking it personally, and who are okay with slow money in year 1 that turns into fast money in year 3. If you want overnight income, this isn't for you. If you want a business that pays you residual income for renewing the same client year after year, keep watching. Let's start simple. A book of business is just the total list of clients you personally sold policies to and manage the relationship with. You make money 2 ways. First, commission on new policies you sell, usually 5 to 15% depending on the line. Second, and this is the real prize, renewal commissions. When your client renews their policy every year, you get paid again, often for doing almost nothing. That's the entire game. You're not selling insurance once. You're building a pipeline that pays you on autopilot for years. Now let's look at real numbers, not YouTube hype. According to the US Bureau of Labor Statistics, the median annual wage for insurance sales agents was $60,370 in May 2024. But that median hides the real story. The bottom 10% of agents earn around $36,000, while the top 25% earn $91,000 or more. And that same BLS data shows insurance sales agent pay runs about 37% higher than the median for all other occupations combined. On top of that, the BLS projects about 47,000 openings for insurance sales agents every single year through 2034, and the broader insurance agency industry is expected to grow by roughly 4.7% over that same decade. Translation: demand isn't going away. People will always need auto, home, life, and health coverage. US Bureau of Labor Statistics +4. Let's talk money. Here's the minimum startup investment to launch as an independent agent, broken down honestly. Pre-licensing course and state exam fee, $150 to $400. Errors and omissions insurance, which most carriers require, $500 to $1,200 per year. Business registration and LLC setup, $100 to $800 depending on your state. A basic CRM and quoting software, $0 to $150 per month to start. A simple one-page website, $200 to $1,500 depending on whether you DIY it or hire it out. Initial marketing budget, business cards, local ads, $300 to $1,000. Miscellaneous, laptop, phone line, printer paper, coffee for client meetings, let's be real, $300 to $600. Total minimum investment to get started, roughly $1,500 to $5,500. Compare that to opening a restaurant or a retail store, where you're looking at $50,000 to $200,000. This is one of the lowest barrier to entry businesses you can start, which is exactly why competition is high, and why most people who start, quit within the first 18 months. Where does that money actually go? The E&O insurance protects you legally if a client claims you gave them bad advice, non-negotiable, don't skip it. The licensing course and exam get you legally allowed to sell in your state. The CRM keeps track of every client's renewal date, because if you forget to follow up, a competitor will steal that renewal from you. And the marketing budget is what actually brings you leads, because insurance is not a build it and they will come business. Monthly operating costs once you're running, CRM and software, $50 to $200. E&O insurance averaged monthly, $40 to $100. Marketing and lead generation, this is where most of your budget should go, $300 to $1,500. Phone, internet, basic tools, $50 to $100. Realistically budget $450 to $2,000 a month to keep the business running and generating new leads. Now, income potential, and I'm going to give it to you straight, 3 scenarios. Conservative, meaning you're part-time or just started, $1,500 to $3,000 a month, mostly commission on new policies, almost no renewals yet. Realistic, meaning you're full-time, year 2, with a growing renewal base, $4,000 to $8,000 a month. Optimistic, meaning you're 3+ years in with a mature book of 300 or more clients, $8,000 to $20,000 a month, largely from renewals that require minimal ongoing work. Industry estimates suggest average profit margins for independent agents run between 60 and 80% once you're past year 1, because your biggest cost, client acquisition, drops sharply once your book starts renewing itself. Break-even analysis. Most agents who treat this seriously recover their initial $5,000 investment within 3 to 6 months, purely from first-year commissions. But here's the honest part. Your real payoff isn't break-even on cash, it's break-even on time. It typically takes 12 to 24 months before your renewal income alone covers your basic living expenses. That's the point where this business stops feeling risky. Biggest mistakes people make. Number 1. Treating it like a job instead of a business. They stop prospecting the moment they have a few clients, then their pipeline dries up. Number 2. Skipping the CRM and tracking renewals on sticky notes, then losing clients to competitors who called first. Number 3. Selling one product to everyone instead of specializing, which makes you forgettable in a crowded market. Number 4. Underpricing their own time by chasing every lead instead of ideal clients. Market gaps worth knowing about. Most agents chase auto and home insurance because it's easy to sell. That market is saturated. The underserved niches are commercial insurance for small businesses, life insurance for young families who've never been approached properly, and niche coverage like insurance for gig workers, freelancers, and home-based businesses, a segment that's growing fast and barely served. Your differentiation isn't being the cheapest. It's being the specialist who actually understands one type of client deeply. Here's how to actually start. Step 1. Get licensed in your state. This takes 2 to 6 weeks. Step 2. Decide captive or independent. Captive means working for one company like State Farm or Allstate with more support but less flexibility. Independent means representing multiple carriers with more upside but more responsibility. Step 3. Get appointed with carriers, meaning you sign agreements to sell their products. Step 4. Set up your systems before you sell a single policy. Step 5. Pick one niche and build your first 50 relationships around it. Step 6. Ask every single client for 2 referrals. This is how agents actually grow, not cold calling strangers. On the system side, you genuinely need 3 things: a website that captures leads even while you sleep, a CRM that automatically reminds you 60 days before every renewal, and ideally a basic quoting or booking tool so prospects can request a quote without playing phone tag. This isn't optional infrastructure. Agents who skip it lose renewals to agents who don't. If you want this built properly instead of duct taped together with free tools, SoftAngle specializes in exactly this: websites, CRMs, and booking systems for service-based businesses like insurance agencies. You can book a free consultation and get a cost estimate. Link is in the description. Marketing strategy. Online, a Google business profile optimized for local searches, short educational videos explaining coverage types, and Facebook or LinkedIn groups where your ideal client already hangs out. Offline, local networking events, partnerships with real estate agents and mortgage brokers who deal with homeowners insurance constantly, and simple referral cards. Low budget approach. Spend your first 90 days on referrals and local partnerships before paying for ads. It's free and it converts better. Scaling strategy. Once you have proof you can close, layer in paid local search ads and retargeting, because now you know your numbers work. Challenges and risks worth knowing upfront. Commission-only income means unpredictable early months, carrier appointments can take time to secure, and state regulations mean you can't just sell across every state without additional licensing. It's also an emotionally demanding business. You'll hear no far more than yes, especially in your first year. Quick do's and don'ts. Do get E&O insurance before you sell your first policy. Do specialize instead of trying to sell everything to everyone. Do track every renewal date without exception. Don't quit your day job until you have proof of consistent monthly income. Don't skip continuing education requirements. Losing your license kills the entire business overnight. Don't ignore your CRM, because your renewal book is the entire value of this business. So, final verdict. Is building an insurance book of business worth it? If you're patient, comfortable with rejection, and willing to treat this as a 2-year build rather than a 2-month sprint, yes, this is genuinely one of the better low-capital businesses available in the US right now, backed by real, growing demand. If you need fast cash in 30 days or you can't handle consistent no's without losing motivation, this isn't the right fit for you, at least not yet. If this breakdown was useful, subscribe, because I'm covering a new realistic business teardown every week with real numbers, not hype. And if you're ready to actually build the website, CRM, or booking system this business needs to run properly, book a free consultation with SoftAngles. The link is right below in the description. Let's build something real.